Hello everyone. Today is Wednesday, December 28th, 2000. Sorry, today is Wednesday, December 28th, 2011. Um, I just want to go over the trades that we took today, the trades we didn't take, and what the results were. Well, I'll start with the results. The results of the live trading room were break even right here. This was our one trade that we took live in the in the live trading room. We went short right here. There was some divergence down here, all right, and we were waiting for a close beneath the MA1. That would be within 7 ticks of the MA1, so my risk would be right on the other side of the MA1. We got short here at 31, and we got 10 ticks profit into the trade right here. We moved our stop up to break even. It came back up, got us out of break even, then dropped all the way down here. Unfortunately, it went about 50 points without us, just a little under 50 points without us. But we did have the trade there. So anyone that didn't manage their risk the way that I did, I got some profit out of that trade. There were some other trades that we talked about, that we had set up during the live trading room. One of them was right here. This was my GAR trade. We had here, this was the first pullback to the BBC after a bearish cross on the 2100 tick. We had a drop down below the 50 here on the cycle, and it pulled back up here, and it went for a good 5 points, 5.25 points. I know at least one of our partners got this trade this morning. It actually went about 11 points. If you would have taken the second trade right here as well, I definitely wouldn't have, and I don't think my car would have either, because the cycle was pointing up, but it did go for 11 full points. The original trade, though, was 5.25, is what he would have been looking for there. Over here on the 230, not 233 tick. Over here on the 4 tick range. This was a pre-market trade. It was the George trade. I had said that I was going to put this text up here that has the rules for the George trade and put it in the recap so that you guys could go back and read it again if you wanted to. The rules for the George trade: number one, price gets a minimum of 3 ticks below the box. The box is the elbow indicator. For a short, it's the red dotted lines. For a long, it's the blue dotted line. The second is that the price pulls back up to the BBC inside the box. All right, inside the box right here, and it's only the first pullback. All right, if you get a pullback before you get 3 ticks outside the box, then there's no trade. All right, you have to wait till the BBC gets outside. So the price pulls back up to the BBC inside the box after the price has gone 3 ticks outside. All right. The entry is a limit order, which you round away from price. In this case, price is at 1261.09. You're going to enter that at 1261.25, rounding that away from the price. 1261.25 limit. Okay, 2-point bracket, and George doesn't mess with his stops. He puts a 2-point bracket on and lets it go. One other thing worth noting is he doesn't pay any attention to the weekly trading zones or anything else beneath the actual price. Okay, but that was a George trade right there. It was followed up by a regular CFRN trade right here. You see we had a fresh bubble down here. We had a lower swing, a symmetrical pullback up here to the BBC. We couldn't short right here because it was going into the weekly trading zone. We didn't short right there because it was going into the weekly trading zone. All right, obviously, in hindsight, it would have worked out just fine, but we didn't do it. We didn't short over here because we had a space, so we didn't short right here on this pullback because we had this space right here. All right, obviously, again, in hindsight, that would have worked out just fine, but it didn't meet the rules. Okay, and that was pretty much it for our trading this morning. All right. Let me scroll back and I'll end it here with the rules. Okay.